Joanne, big drop in inflation expectations. Walk us through how we should read these numbers.
So consumers have absolutely noticed that the slowdown in inflation has stalled a bit, and that's part of the reason why consumers aren't feeling great with their sentiment this month. But at the same time, they do expect the slowdown in inflation to continue, and in fact, they're both the short-term and the long-run inflation expectations, as you said, have come down quite a bit.
Why?
And this is largely
Joanne, why? Why are they so convinced?
The movement in the inflation expectations is largely attributable to consumers, a reduction in people with very high inflation expectations. So about a year ago, almost a third of consumers thought that one-year inflation would be over 10%, 15%, 20%. But that's all the way down to 15% of consumers right now. So I think consumers are broadly feeling like inflation is starting to come under control. It's not of course, these could still turn around depending on economic developments, but consumers are starting to firm up their expectations and feeling a little bit more optimistic about that, particularly in the long run.
Gasoline prices. Let's fold in a higher gasoline price. How will that change, do you think, how consumers feel about what they see in front of them? To what extent could these numbers change? The market's been shocked by the high oil price this week. Are consumers going to feel the same thing?
I think it really depends on how much this passes through to gas prices. Consumers continue to be concerned about gas and fuel prices. You know, that the number of consumers who spontaneously mentioned those prices in our surveys did increase over the last couple of months, along with gas and fuel prices. But it didn't really affect either the short run or long run gas price expectations. It didn't pass through to that. So consumers are not expecting these increases in fuel prices to persist. But of course, if they do, then consumers will adjust accordingly. But at the moment, they are not expecting them to persist.
Joanne, how do consumers and those you poll feel about the job market right now?
Consumers are starting to show some signs of vulnerability in their labor market expectations. Unemployment expectations have worsened over the last month or so, and consumer expectations over their incomes over the next year dropped quite a bit between August and September. Now, broadly, they do recognize that that labor markets are historically strong, but we are seeing some signs of vulnerabilities emerge in the data.
Joanne, Claudia Sahm of the Sahm Rule wrote an opinion piece on Bloomberg a little earlier on today. Why are consumers still so gloomy was the title. The answer appears to be blame COVID, that there has been a permanent shift lower in expectations, that pessimism post-COVID is just embedded at a higher level. What do you say to that?
What we see in the data is absolutely COVID continues to have an effect, or the perception of a new normal after COVID. Consumers had their all-time historic low in consumer sentiment last June. In spite of the fact that, yes, we had high inflation, but it was nowhere near the types of inflation that we saw in the late 70s and the late 80s. And with COVID, along with political polarization, along with enormous amount of uncertainty in a lot of policy arenas, have led to consumers really feeling quite dismal about the economy, and not just about the economy, but other aspects, aspects of how they view the country and society more generally. So, I mean, I do agree that this new reality that came in with COVID has shifted consumer views and consumer attitudes. But it remains to be seen, I think, if whether or not this is going to be permanent. I mean, it's very possible that if we were collecting data during the Spanish flu in the early 1900s, we would have seen the same thing. But unfortunately, we hadn't started at that time.